Zillow stock, Z or ZG stock, is down over 50%, I think over 60% now, whereas down about 10% today and then another 13% in the after hours based on some lousy news for the business. We'll talk about that news in just a second. So I'm wondering, is this potentially a bargain bin territory? Because Zillow brand is very strong, potentially an unrivaled business model, potentially an unrivaled brand, where a lot of folks on their journey to find a home and buy a home, Zillow is often one of the first stops in terms of research. And so the question is, could you, recognizing that this is a very strong brand, could you say that the business is cheap now that it's sold off so significantly? So we'll talk about that. We'll talk about the latest news, as we dive right in. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no hype, mission focused channel trying to find you exceptional companies and unrivaled investments. So as usual, in full disclosure, this is not financial advice, and at the time of this video publication, I did not own any stock in Zillow, Z or ZG stock. So Zillow stock dropped about 10% and then dropped another 13% after hours when they reported soft quarterly results, including the news that they were shuttering their Zillow Offers iBuying segment, so this home flipping segment, and laying off nearly 25% of their workforce. If you are, one of the members of that workforce, I'm sorry for this bump in the road in your personal journey. Now, management's goal with Zillow Offers to be their goal with Zillow Offers was to be a market maker, not a market risk taker. So they didn't want to take on the pricing risk of home fluctuations. This was under the assumptions they could accurately forecast the price of homes a few months out within 2%. So that's what their goal was. But the reality is, within the last 2 years, they saw several quarters where they were just way off. One period where home prices just went up dramatically and they said, hey, this is great. And they ended up underpaying by about 5%. And then recently, as the home market cooled, they actually overpaid by 5 to 7%. And you might think, well, that's just no big deal, a few percent here and there, that's small potatoes. But the reality is, when you're dealing with billions of dollars in terms of homes, it's add up to huge losses, and over $400 million in loss from their home division alone in the third quarter 21. Not a lot of businesses can sustain a $2 billion run rate for a segment. And so I think it's prudent for them to reassess, sort of say, hey, where to from here? And what do we want to refocus on? Now, from its recent peak, it's not surprising to see the stock drop so significantly, over 60%. As Offers was viewed, this home flipping segment was viewed as having hyper growth potential. I mean, look, in less than 4 years, they grew this segment to several billion in revenue. The challenge was that it was just too hard. It was always super low margins, super razor thin margins. That was their end goal. And it was also disappointing a lot of website visitors, as only about 10% of serious sellers accepted their offers. So this reflected that their value proposition actually wasn't resonating with the majority. So where to from here in terms of Zillow? The reality is that they still have two core profitable segments, their internet, media, and technology, as well as their mortgage segment. Mortgages is much smaller and less profitable. It'll probably grow much slower without the home segment. So I'd argue one should really focus on this IMT segment, internet, media, and technology, which is the vast majority of their revenue and profit, and is focused on empowering agents and brokers regarding the transaction for residential real estate. And home buying process is still as painful as ever, and they still have this vision. Even if they're shuttering their home flipping business, they still have a vision of Zillow 2.0, where there's a marketplace of solutions to make the process as seamless as possible. It is a painful process, and there's plenty of low-hanging fruit, I'd say, to make it a better process. There's still billion-dollar opportunities. Now, personally, I like to see them going back to their roots of scaling up asset-light solutions with big markets. So this gets me excited when they're saying, yes, we're going to maybe consider a marketplace solution to deal or address all these different challenges that occur in this process. Now, is the stock cheap now that it's sold off so significantly? I mean, today alone, it's down about a quarter. So let me do a quick plug first, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers as well as my personal portfolio. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So once again, if you're interested, go to unrivaledinvesting.com, click join the journey. And if you're enjoying this video, learning about companies, please make a point of hitting that subscribe button, hit that thumbs up button. So as we look at Zillow, the reality is, even though they have this huge bump in the road, laying off 25% of their workforce, getting rid of what was perceived as this huge growth potential with their home flipping segment, they still have a huge runway in front of them. They participate in only a mid-single digit percentage of market share transactions. That is not majority. This is a couple percent, despite having one of the most recognizable brands in the industry, where most people start their journey in terms of buying a house looking at Zillow and sort of saying, well, what's the market? What can I do? Getting exposure. There's definitely a lot of potential demand there when you own the top of funnel. They still have significant potential to address pain points around shopping, renting, financing, and moving. So there's all sorts of pain points they can address. And they're also run by the CEO and co-founder, Rich Barton, who I honestly was very impressed with the humility he showed and thoughtfulness on this most recent conference call. So effectively reflecting on, like, look, I made a mistake. I made a big bet. Didn't work out. I don't like laying off 25% of my workforce. But there has to be an easier solution. And we were wrong to sort of have that solution, that internal harmony of saying, yeah, this was off. To be able to recognize that in a very public way, I got to applaud that. Now, one example of potential additional value that they might start immediately bringing to the table is how Zillow just completed the acquisition of Showing Time, so a small tuck-in acquisition, which streamlines this cumbersome process of touring properties, where you're scheduling the logistics between the homeowner, the agent, as well as the prospective buyers. So that's just one example of addressing one of the pain points that you might be able to do directly through their website, which could create a lot of value and might be something that many agents and brokers pay for. So looking at their valuation, where I'm primarily focusing on their IMT segment, which is their main revenue and profit driver. Of course, stock prices can go way higher or lower than this hypothetical framework, and understand this framework depends on them executing. The worse the performance means worse downside. And similarly, if they have even better performance that I'm penciling out, there's even more potential upside. So that's worth considering. Assume they grow around 30% there this year in their IMT segment, which is the fastest growth rate for several years, certainly faster than the last 3 years. The question is, what can they grow at in the future? I assume a range of around 10 to 15% in the upcoming 5 years, 10 to 15% annualized growth in the coming 5 years. And then assume long-term margins for around 30 to 35%. They're currently fluctuating around that margin level, so it seems prudent. It seems like they're at a good margin level there. Maybe they could do a little bit more. And an N multiple 5 years out of 20 to 30 times based on this growth rate of 10 to 15% and having a really strong brand. This gets a range of about 60% higher and about 30% lower versus their current market cap. Now, I haven't included the mortgage segment, which is maybe worth around $1 billion, give or take. So really, it's not the big driver here versus IMT segment. So in order to be a bull on Zillow or Z or ZG stock, I think you need to believe either higher growth rates in the years ahead. Maybe they can do even better than 15%. Maybe you think that there's acquirer will step in and management would eagerly get out of the way. I don't think that would necessarily be the case, in which case you get an even higher multiple. Or maybe some sort of success with a marketplace model where they start offering additional services that sort of go straight through them, that's asset light, high margin. Or maybe you just wait for something easier. I mean, that's the reality with investing, is you don't have to, pick everything that you see. The reality is there's thousands of securities out there, so why not look for things that are potentially easier? I just called out exclusively for my Journey subscribers a company that trades 30% below its book value. And, if they just, compound at, somewhere between 5 and 15%, you could have a very satisfactory return in the years ahead between that growth and a re-rating. And this is a company that's crushed the indices over several decades. So I'm thinking, hey, if they just deliver what they hope to do, then you're looking at 200, maybe 250, maybe even closer to 300% upside over time. So I called that out exclusively for Unrivaled Investing Journey subscribers. Anywho, if this video around Zillow has been helpful for you, your thoughts, and if you are a big Zillow bull and you disagree with any of this, or you think I'm missing something, I'd definitely love to hear it in the comments below. Thanks so much for watching.